ICICI Pru Life Insurance posted a fairly strong quarter, and as a result of that, we are seeing that the stock is up over 7% in trade. Most of the brokerages also maintain their buy stance. In fact, the life insurer has gone ahead and reiterated the guidance to double the VNB over FY23 from FY19 levels, which is fairly positive in the current environment. And not just that, we're also seeing that most of the brokerages to maintain a buy. In fact, Morgan Stanley has an overweight stance, and they do state that Q4 numbers were fairly good. They have reported a strong annualized premium growth pickup so far, and also the reiteration of the guidance for FY22 is positive. In fact, Motilal Oswal also has a buy stance with a target price of 600 rupees, which is 600 rupees per share, which is a return of close to around over 30% from the current market price. We at ET Now also spoke to ICICI Pru Life Insurance MD and CEO S Kannan, and this is what he had to share. He stated that yes, they reiterate the guidance to double the VNB over FY23 levels. This is from the FY19 levels, and in order to double the VNB, this would mean that they need to grow at 28% per annum over the next 2 years. The first phase has been of margin expansion, which has been led by the overall improvement in the protection mix, and from here on, the primary growth driver for the value of new business will be, of course, growth. In fact, he also stated that if you look at the FY21 embedded value, that now stands at 21,900 odd crore, which is a growth of 26% YOY. And in terms of the overall contribution to the embedded value, nearly 15% of the growth has come in from operating profit, which is a combination of both VNB as well as the unwind. Focus for them would now be to double the VNB, which would be feeding into the overall embedded value. The value of new business and persistency improvement would of course be driving the overall embedded value from here on, and scale as well as operating leverage, which is going to kick in from the current year, should also be overall supportive of the embedded value. In fact, do note that most of the analysts do give a multiple to the embedded value to decide on the valuation of overall of any life insurance company. In fact, Mr. Kannan also mentioned that they have been working fairly hard in terms of overall improving the product mix, and also on the distribution front. ULIPs, which stood at 82% in the last